Hello folks, Hector here, recording a nice trading setup that's happened this morning as the European markets opened. I didn't profit from this trade, and quite frankly I'm not quite sure why I let this one go. I was spotting this thing in real time as the European markets open, but well, quite frankly, I'm not very sure why I didn't take it. I don't know, hesitation in the last moment, and well, by the time I wanted to react, the train had taken off without me. Quite a shame, because like I say, it was a fantastic opportunity. All right, so just since I didn't profit from it, I reckon it might be a good example, a good opportunity to record a video and to show you guys the type of early morning fake breakouts that we usually see as the European markets open. So, well, you guys can profit from it the next time around. All right, so we are looking into the sterling pound against the Australian dollar. As usual, the 1 hour time frame is the ideal setup chart for the London Open breakouts. We can see how price has been certainly downtrending throughout the last few days, certainly an intra-week downtrend. We can see on the daily box indicator how price has been printing red color days, certainly a downtrending price action. We just need to take a look at the daily box red color. Okay, so the Tokyo range happened at the extreme boundary, at the extreme level of the previous day's range, which means, well, in this case, the lower end. All right, and moreover, if we zoom into the 4 hours time frame, we can see how we have a previous level of support at that level. Okay, so effectively, we could also use the previous day's, the previous swing low, the previous turning point, the previous support level on the longer time frames, in this case the 4 hours time frame, in order to search for either continuation moves or reversals. It's always a good idea to take a quick look into the longer time frames, just to see whether we are about to hit a long-term level of support and resistance, so we can leverage or enhance our entry off that level. All right, so the Tokyo range, let me go back into the 1 hour time frame. The Tokyo range did happen at the ideal location as per the trend, as per the previous day's range, and also as per a long-term level of support. Now, as the Frankfurt market was opening, right there we saw a momentum move. Actually, let me zoom in a little bit more. All right, we saw a momentum move to the downside. Take a look at that long red bar, which signifies the early morning momentum. Okay, again, the Frankfurt market opens, early morning volatility kicks in the market. We see a breakout in one given direction. We touched that former level of support that I was just showing you guys in the 4 hours time frame, and from there we see a heavy reversal. Okay, very typical price action. Early morning fake breakout. Immediately after, price comes back within the Tokyo range, and eventually it breaks in the other side of the Tokyo range. All right, this being the high for the Tokyo range, just below the 20400 round number, and the low for the Tokyo range being the next round number 20350. As you can see, the round numbers do work as pivot point on the from an intraday point of view. Okay, take a quick look how the Tokyo range has been moving within the 20350 and the 20400 price, bumping sideways within those two levels. The volatility kicks in the market. We break through that level. Price turns around immediately after as the London session opens. Okay, another volatility influx in the market, and eventually we get a breakout on the other side of the Tokyo range. Now let me zoom into the 15 minutes time frame, which is what the time frame I use as my setup chart. Let me zoom back out. All right, right there. This again is the Tokyo range low, and this is the Tokyo range high. See how we didn't get that breakout pullback continuation pattern? That's why you want to always base your entries on breakout pullback continuation patterns in order to avoid fake breakouts early in the morning. Okay, eventually the breakout pullback continuation does take place in the other direction. This is the breakout thrust. The London market opens around there. Okay, breakout thrust, then a pullback retesting that 20400 from above. All right, the Tokyo high from above. That level does hold, and from there we see the continuation move right there. Well, taking or pushing price up for another 50 pips, with which could have easily made us some pips on this reversal formation. Okay, a breakout, reversal, breakout on the other side with a breakout pullback continuation pattern, entry 50 pips to the upside. Well, more than enough to either secure your stop loss to break even, perhaps cash out some pips at the next round number 204.50, etc., etc. You know all about that. I just wanted to show you guys this fantastic example of a early morning fake breakout. Does happen very often. If you see, as the Frankfurt opens, this type of reversal formation, don't just give up, alright? Don't just give up on the trade. Once price comes back within the Tokyo range, perhaps breaking the mid band of the Tokyo range, don't just give up on the opportunity, because you can get an entry off the other side of the Tokyo range, alright? Please mind how it's important to see, first of all, a trend on the an intra-week trend as per the last few days, 2-3 days. You don't need more than that. So you can either search for a continuation move or a reversal. Some people ask me whether you need the intra-week trend in order to search only for continuation moves. That's not the case. You need the intra-week trend in order to search either for both continuations or reversals. If you don't have a trend, okay, if price has been moving sideways for the last few days, you cannot get either the continuation or the reversal, because there is no trend to search or to base that reversal or that continuation off, right? Or from. You certainly need a directional bias before actually getting both the continuation, or either the continuation or the breakout. At any rate, you can certainly trade in either direction once there is a clear overall market directional bias. That's basically it as far as this video goes. Fantastic example. Please do follow, do search for this type of moves, either the continuation with a breakout pullback continuation pattern. If it doesn't pull through, and if eventually price turns around in the other direction, don't give up on the setup, because you may get opportunities in the other side to get some quick intraday profits. Okay, maybe 40 pips, 30 pips, perhaps just shooting for the or exiting a portion of the trade at the next round number, letting the second portion of the trade run to the full average daily range projection, which in this case comes all the way around there. You may want to exit at the previous round number before hitting the average daily range projection, in this case 205.00. But at any rate, fantastic example. Alright, okay folks, that's all. Bye bye.